Okay, testing, 1, 2, 3. Testing, 1, 2, 3. Let me make sure that we are live. Okay, let me just check to see. Testing, 1, 2, 3. Let me see if you guys can hear me and see me. Hmm. Technical difficulties. Okay, well, it appears that I am going to be streaming from my LinkedIn profile. So if you can join me there so that you can see the presentation. Let me just let everyone know that. Hang on just a second, and we'll get this party started. Okay. Okay, we are never to let tech count me out. Sorry for the delay, you guys, but I hope you're joining me here on my LinkedIn profile. I'm going to get started with our wealth strategies for first generation investors. So hopefully you saw the note and you will join me over here on my profile. So I am going to go ahead and share my screen. And let me just double check that everyone can see that on my LinkedIn profile. Thank you for your patience, but sometimes things don't always turn out the way you had planned. So, what you have to do is you have to pivot. Excellent. So, let me just make sure that you're looking at what I'm looking at. And perfect. So, no, it looks like you're not seeing my screen, are you? Let's give it just a couple of minutes and I'll let you guys catch up with me. Okay, good afternoon, everyone, and welcome to our Wealth Strategies for First Generation Investors. I've been having some technical difficulties, and it looks like I'm on a new system and I am not going to be able to share my screen. So, you know what, guys? I am just going to talk through it with all of you. And today's discussion was really about the challenges that first generation investors have. And I myself am, a first generation high earner, right? And so with that comes a lot of different challenges. And those challenges are really related to, because you're first generation, you don't really have anyone guiding you. And as a result of my career, I learned how much I really didn't know. And what I didn't realize is that when you're the first generation, you're kind of trying to figure this out all out on your own, and you didn't have anyone to teach you. So, teach you about how to turn your income into wealth. And that's really what this conversation is going to be about today. So I will have some brevity because my slides aren't showing. But at the same time, I want to make sure if you registered that you get some value out of this. And so the question I have, and I'm looking on, if you're joining me, make sure you go to my profile page because that's where this is being broadcast instead of on the event page. And so the first thing I want to say really is that one of the things that I see and have seen in my career, and one of the reasons I started my company, Wealthy University, right? Or is because I realized that there were so many people like me who had been taught to get a great education, get a great job, earn six figures, and really go after that American dream. But unfortunately, that hasn't worked out with too many first generation investors because that was an old model, and that old model was and I don't know, that's certainly what my parents gave me. That's the blueprint they gave me to achieve financial success and to be able to move beyond where they had what they had achieved. Now, mind you, my parents made it in the middle class, but they made it in the middle class by working for companies like United Airlines and Chrysler. And what they got, what that we don't have, well, very few of us have, is a pension, right? So they had a pension, so they didn't have to worry about their retirement. They retired after 30 years, they received a check, and everything was all right with the world. Now, for us, that shifted, and the 401k came, I want to say, in the late 70s or early 80s. And even though the creator of that plan thought he was doing a great job and another giving us another savings vehicle, what he didn't realize was that the companies would take away the pension and put all that risk on us. And so, as a result of that, we have been charged with managing the assets of our retirement plans. But guess what? We were never given an instruction manual. I mean, I want to think about it for just a minute. I know some of you are joining me on my profile page, but I'd love for you to just share, did you, through your formal education, get access to knowledge that would help you to manage your plans, right? That taught you how to analyze and research your mutual funds that are in your retirement plan, taught you how to get the best return on your investments, and, quite frankly, really taught you how to not only mutual funds, but analyzing and research stocks. What I would submit to you is I got an MBA. I received an MBA, and I had no classes on investing. And so, one of the reasons that I want to have this conversation, particularly with first generation investors, is what I've seen through our company, Wealthy You. And let me just say, let me step back for a minute. So, how did I learn? I learned how to invest through the profession that I chose. I spent over a decade with Fidelity Investments, and what I learned was that most of the wealthy aren't first generation investors. They literally, when their children become of age, take him into the private banker, sit him down, talk to them. Well, and they've been having these conversations all along. And so they have wealth passed on to them in the form of trust. And in those trusts, there are stocks, there are dividends, there are all kinds of different assets. And so they receive that knowledge from their parents. And what I began to understand was the knowledge of how to invest is inherited. It's not, and I'd love for you in the chat if you're watching me, disagree or disagree. I mean, do you disagree or not disagree, right? Or agree or disagree, right? So the question I have for you is, do you agree that the knowledge of how to build wealth is inherited? And that if you didn't have someone pass down that knowledge to you, very likely you aren't going to know what to do. And what I also learned is that the wealthy pay less in taxes because they have tax advantage strategies. And those tax advantage strategies, what they allow them to do is they understand how the tax code works. And so as a result, what they do is they use it to their advantage. And so for many of us, we're not taught how to use the tax code to our advantage. We're simply taught to be earners. Okay. And earners, being an earner instead of what I call an owner of our assets, that's puts us at a disadvantage because, and I want you guys to get this, and the reason it puts us at a disadvantage is because we're earning the money, but our money is not working for you, working for us. And so, why is that important? That's important because our money's not working for us. And so our money is growing slower. And the other way that plays out is that we're risk averse. So why are we risk averse? We're risk averse because we don't have the knowledge, right? Now, because we don't have the knowledge, we're fearful that we're going to lose money. And so all the while we're being fearful, we're putting our investments in conservative investments. What happens is that at the end of our retirement, we could have 2 to 3 times as much, but because we were fearful and because we were risk averse and stayed in fixed income investments, our money doesn't grow. So let's talk about why that's important. Why that's important is that, uh, for example, the market is reaching new highs, and yet the problem is the market is reaching new highs, and yet the problem is that far too few first generation investors are taking advantage of it. We're still fearful. We're still we may dibble and dabble, but we have no process of evaluating these investments. And so as a result, that fearfulness that we're experiencing is leaving us behind, right? It's leaving us behind. And hold on, I thought I could get my slides up. It's leaving us behind. And so the bottom line is that for the past 10 years, I've been helping first generation investors, primarily women, learn how to accelerate their financial growth. So I want you to take out a paper and pen since I don't have my slides. Let me just see if I can bring these slides up. Ta-da! My slides are up. Okay, this is great. This is fantastic. Okay, let me just give it a few minutes and make sure you can see my slides as well. because I know I'm a little delayed, but let me see if you can see my slides as well. I'm telling you guys, I was going to figure this out. Okay, perfect. You can see my slides now. So this can be a show and a tell. Okay, so perfect. Give me just a second. Where there is a will, there is a way. So I kind of got ahead of myself, but here's what I learned is that while I was in the industry, I talked a little bit about my parents, and this is a picture of my mother, and this is the on the left side is a picture of my mother, on the right side is a picture of me. And my mother did everything she could, and she gave me that blueprint: college, career, earn six figures, buy a big house. That was the blueprint I was given. But what my mother didn't realize, and what I realized when I started my career as um, being at Fidelity. Wait, looks like, are my slides moving? What I didn't realize is that my mother, and the blueprint that we were given was the earner mindset. And what that earner mindset does is you spend all of your career trying to earn more money, but you never learn how to turn that income into wealth. And that puts us at a real disadvantage because we don't know how to use the strategies that the wealthy do. And let me just see. I'll give it a few seconds to make sure you guys can catch up with my slides. Okay. Huh. Apparently my slides aren't moving either. So let me try something else, because I'm just going to get to one slide because I want to make sure that folks understand the strategies, right? And the strategies are here. So here's what I want you to do. I want everybody to take out a paper and an ink pen, or you can write it in your notes. But this is what I want you to understand, is how you can leverage. Hold on, I just want to get to the right slide. What first generation investors need to do in order to build wealth. So hang on just a second. And I'm going to give you the blueprint for first generation investors. So give me just a second. And I'm going to share this with you. If I can't share, then you could see them. That's interesting. Okay. So let's see if I go back. And then, hang on, I'm going to share my screen again. Okay, so let's see if you guys can see this. Man, this is like a lab. I'm using another system and not Zoom, and it is not serving me well. So hang on just a second. Let's see if we can't. But I am determined. I will not be deterred, you guys. So I hope you don't mind. But sometimes you just got to keep giving it the old college try. Oh, so it's okay. So now we're there. All right. Let me see if my slides will come up. But there's one in particular that I think is critical for first generation investors to know exactly what they need to do to accelerate their financial growth. So I'm going to give it just a minute. So just confirm that you can see the slides. This slide. Someone in the chat or in the comments, just confirm that you can see it. Okay. I think you're seeing it because I'm seeing it. And so what I want to encourage you guys to do is just take a snapshot of this. Okay, take a snapshot. Awesome. You can see it and I can see it. So these are tax advantage strategies for high earners. And I want to give you a roadmap, really. And that roadmap is the first thing. Well, we all know that we should have an emergency fund and savings, but what often gets overlooked in your benefits package, what often gets overlooked in your benefits package is your health savings account. So years ago, all we had was a flexible savings account, but now you have a health savings account. And what I found with many of the members in Wealthy U is rather than investing that money, they just have it in an interest bearing account. So, those of you who have a health savings account as your benefits, I want you to call HR or go online because everybody has a portal now and check to see if you have a health savings account. And the benefit to that versus a flexible spending account is you're able to invest the money, that money can grow, and then you can pay your medical bills from that health savings account. Now, the next area I really want you to keep an eye on is, of course, your 401k, right? So here's what I find is that many of you are sitting in investments that aren't paying you a competitive return, or you're being very conservative, and so your money's not growing fast enough. And so to that edge, you've got to make sure that you're maximizing that contribution, that you're taking advantage of employer match, but also that you're going beyond that match. And if you're over 50, you can invest another $7,500. And now I think it's over 30,000 that you can invest a year. So some of you may have a Roth 401k option, and it's even okay to look at splitting between the Roth and the regular, depending upon what tax bracket you're in. The other, so now you've maxed out your employer your 401k, you've optimized your investments, and so now what you get to do is, if you can still put more away, is then you can look at doing a Roth IRA. Now, if you're making, I think it's over $116,000, you may not be able to do a Roth, but that gets to the next strategy the wealthy use, and they do a backdoor Roth, a backdoor IRA Roth. And the way that you do that is pretty much everybody can. I don't think there are any income limits on this, but pretty much everyone can invest in a regular IRA where you don't get to deduct it. But then what you do is you call your Fidelity or TD Ameritrade, wherever you open that account up, and you tell them you want to convert it into a Roth. You don't want to wait too long, because you're going to have to pay taxes on any gains in that account. But that's another way of really accelerating your financial growth that you may not have been aware of. So what's the next step? The next step would be, okay, you've maxed out your 401k or your 403b or your 457. The next thing you're going to do is then you're going to explore to see, if does your employer have, and write this down because I don't have it on this chart. If you work for a public company, are you taking advantage of their employee stock options programs or their employee stock purchase program? There are two. Sometimes you can be awarded employee stock options depending upon what your level of role is. But what many of you don't know is some of you can even invest in a employ through your company stock, and typically you can already buy it at a discount, and so sometimes it's 10 or 15%. So you've already got a built-in gain, and if you have that deducted out of your account, man, like out of your paycheck every week or every other week, however you pay, that can really add up. So, what's the next thing you need to explore? The next thing you need to explore, are there other uh, deferred compensation plans that are available to you? So, sometimes it's not just the 401k. Sometimes your company will have plans that will allow you to contribute at, above and beyond your above and beyond your 401k. Sometimes there's profit sharing plans, but you need to take advantage. Okay, so next up, and this is next, and I've put this in a hierarchy, right? Because the other thing is, like, a lot of this is a mistake that I see many first generation high earners make, is they are transferring their, like, if you leave an employer and then you have a 401k and you're doing a rollover and you're rolling over to an annuity. Listen, that's the worst thing you can do, because that account, provided you open up a rollover IRA, is already tax deferred, and annuities have additional fees because they have a mortality expense, and so that's going to eat into your return, right? So I'm not saying there's not a need for, like, there aren't certain situations where annuities make sense, but listen, if you've met all of these other maximums, right? You've maxed out your 401k, you're putting the maximum in your regular IRA, backdooring it to a Roth. You've taken advantage of your employer stock options program. You've taken advantage of your health savings account. You've done all these things. Then annuities are an additional way to uh, invest for retirement, because annuities provide something that no other account provides, and they can provide you really with an income, because that's all a pension is an annuity that you that based on your life expectancy, it pays you a monthly check. You can create that on your own. Now, there's something else so we've talked about 401ks, right? But there is a limitation to 401ks and 457s and 403bs. And that limitation is that they often limit you to a small variety of funds. And in some cases, those funds haven't, they may not be great performers. So there are a couple of things. Now you want to expand out of your 401ks. And when it's buy and hold, capital gains, that's when you're building your own portfolio of individual stocks. And the benefit to that is, even though they're not tax deferred, the capital gains are taxed at a lower rate than what ordinary income is, right? Like the income that we earn from a W-2, that's the most expensive income and the most highly taxed, right? Well, let me just say that's the most highly taxed form of income. And so the other thing that I learned about the wealthy is that they're building portfolios of stocks that pay dividends. Dividends are paid at a lower rate. So you should have two things going on. You should be contributing to your retirement plan and also contributing to your 401k, right? And and so you should be building outside of your 401k. You should have the ability to you should learn how to analyze and research stocks and start building your portfolio. So at this point, I want to just give it a few minutes, and I'm watching you guys on LinkedIn. And so, I hope you guys can see me. It looks like my video stopped streaming. Okay. Well, I'm gonna land this plane since we are having these issues. And the only thing in the comment section, we will provide you with a link so that if you want to, two things. If you want a copy of my book, Wealth Secrets, which gives some great examples of women who have applied the concepts that I'm sharing with you, these tax advantage strategies for high earners. And if you'll just put in the comment books, and also if you would just like a complimentary session for our team to review your investments and give you some pointers on what you want to focus on, that's also available too. So, just as a wrap up in summary, we were given the wrong blueprint, and that blueprint has us focusing on earning more income and not sharing how we can turn our income into wealth. Secondly, you have to begin to understand the strategies that the wealthy use to keep more and to grow their money faster. And so much of it is you're standing 10 feet away from gold, but because you don't know what you're looking at, uh, you don't understand how to analyze and research your investments, your money's not growing fast enough. So if you'd like to learn more, again, we'll put more information in the comment section on both our event page and this page, and provide you with uh, a link so that you can get a copy of the book, and you can also set up an appointment with us. And so with that, I want to thank you for joining. Sorry for all the technical difficulties, but we finally got there. And so I hope this was of value.